What's going on, guys? This is going to be the first trade recap of May. Today is officially the second month in quarter two, and today was an amazing day. We started this day off green, which I freaking loved. It was awesome, and I'll run you guys through all my breakdowns on what I thought was going to happen. So first thing I wanted to mark out was draws on liquidity that I was hoping to target. One possible solution that I saw was these 1 hour draws on liquidity really high up. And originally my bias was to the downside. It was very bearish until one thing that I want to point out One thing I want to point out a lot, right? And that had to do with my 4-hour time frame going into the trade. We had a 4-hour fulfillment of equilibrium and a 4-hour fulfillment of a fair value gap. I can draw that out for you guys since I didn't have it on the screen. But look at this. If we just take it from that high to there, we'd come right down. I'll change that color actually from blue to green so you guys can see it a little bit better. Right, we come down and then we peak the equilibrium, we peak the fair value gap, and we had the Fibonacci retracement. This is actually a new tool that I'm experimenting with. Actually, no, we didn't have a deep retracement into Fibonacci. We actually just had the equilibrium and the fair value gap fulfillment, which was awesome. So now that's how we knew, alright, 4-hour time frame, on higher time frame, we're going to be bullish going into market. So then going into market, what I saw was a bunch of draws on liquidity that I wanted to target. So the blue lines all the way at the top mark my 1 hour draws on liquidity that I hope to target. This draw on liquidity right there, and then we have another draw right there, another draw right there, another draw right there. I knew that if we were to break structure on this and we'd have more confluences to the upside and inverse this blue square that I had marked out was a 1 hour fair value gap, and if we were looking to inverse that, then we would look for draws to the upside and eventually start moving out of it. Well, going into the trade, we also saw this imbalanced price range right here that got taken out during pre-market, and this black line that I want to point out a lot was very nice sweeps of liquidity. We swept liquidity right there, we swept liquidity right there, swept liquidity right there, we swept liquidity right there. We had such a nice resistance level right here. Like, price wanted to come down further out of it. It did later on in the day. This was a trade that I missed out on. I'll show you guys what that trade had looked like. But this was an amazing area for price to rebound out of. One thing that I wasn't sure was going to happen was we came out and then we closed below this. I honestly thought we were going to come down and we were going to grab this form of liquidity. I mean, we were only, from here down to here, we were only $1 off from drawing it, but ultimately it's alright that we didn't. We made profits on bullish today, and I'll run you guys through my trade. So through the trade, what I went to go mark out was this resistance line right here that price was struggling to break on, and then we had a clear break right there. Now, one thing that we could have looked for right here is we could have looked for a form of 5-minute retracement. I mean, we broke it on 5-minute. So honestly, a better buy-in that we would have a much better buy-in if we bought in down there, because one, we broke the equilibrium right there, and then two, we had the Fibonacci retracement into there. I'm confident that we did. See, right there. We had our Fibonacci retracement into our golden zone above the 70, and we closed above the 75 percentile range. Now, Fibonacci retracement might be hard to learn. For anybody getting new into it, it was very hard for me to learn. I'm telling you guys, I only reviewed it for one day. I'll be open and transparent about that. But I'm very confident on how I can use the Fibonacci retracement, and we can use. The reason why I like to point out the Fibonacci retracement is because we closed equilibrium right here. And people might think, alright, we're going to close equilibrium, and since we didn't move out of it immediately, maybe it's going to come down lower. Well, this is where the Fibonacci retracement comes in, and we can use these levels right here to look for moves back up out of it. So ultimately, this was a better buy-in. This was actually a buy-in that I used on my other account because I was trading on both accounts today. So that was what I used on my other account, but I'll run you guys through what I saw. So one, we come into pre-market, we have a little bit in volatile range, and then we see, alright, now since we swept all the liquidity right here, we're moving to the upside. What do we have? We have clean breaker structure right here. After that clean breaker structure, we got to look for draws to the downside. So we hop on our 1-minute time frame. Now we're looking for our entries. 1-minute time frame. We come in. What do we have? We start rushing up. Alright, we had this candle spread right here. No fair value gaps, no nothing. Alright, this is a good chance to look for equilibrium. So we come in and we fill equilibrium. We fill equilibrium and we start moving out of it. This was my original buy-in. at first, alright, we're making good structure, then we get into the profit zone, and then we shoot down negative. I don't know why I shot down negative this low. Honestly, I did not think that this 5-minute equilibrium was to get taken out, because I didn't think that if price was shot up here, price wouldn't want a deep retracement all the way down into that zone. But luckily for us, we didn't get stopped out of that position, because our stop loss that we set was below a 5-minute low. Our stop loss that we set was at this 5-minute low, so that way we had the chance to grab equilibrium. And even if we didn't grab equilibrium, we could have a lot more sweeps off 1 minute draws on liquidity, like this draw on liquidity right there, these draws on liquidity right there, these ones. We could have swept all these, even these ones right here. So we could have swept all those 1 minute draws to the upside. So that, I mean, after that, it was really textbook. We come in, we have a 5-minute confirmation confluence, we have 1 minute confirmation confluence, we have high time frame bullish, we have everything time frame bullish, we have draws on liquidity that are being swept off. We have draws being swept on 30-minute, 1 hour. Right, so we're making good bullish trend. So then we come in, and then we have just slow price action. I mean, big wicks as always. You know, we come down, we want to fill these orders right here, and then ultimately we move up and we take out one of our take profits. Now, why did I miss this zone onto the downside? Honestly, I was not trading at this time only because I fully wanted to. Because at this time I fully wanted to just take my profits for today. The one thing that I like to measure is not ultimately by how much money you made on the trade, because I'll be open and transparent. I only made $22 on this trade, not a lot compared to my other days where I'm averaging $120, right, on my good days. But what I want to point out is our return rate. We had over a 100% return rate on our trade. Now imagine if we took that trade $1,000, then we're up $2,000. That's a 100% return rate. So you got to think about it like, alright, if we can have high percentage return rates, then we can show that we're profitable more than we are than making money. Because ultimately, trading is not about making money. Making money is just a plus when they're trading. We want to gauge our percentage on how much we can increase in volume rather than how much money we can make. The money will just come and go. The money will follow, as always, right? But with this, we can have amazing moves to the upside, amazing forms like that. We can have amazing percentage gains, and percentage gains ultimately show how profitable we are, and it shows how consistent we are with our money. And we can aim to target 100% return rates. Obviously, if I wanted to target up here, that would have been probably a 200% return rate if we would look to target all the way up here. But one thing that I like to do with trading is I like to stay humble. I like to keep it simple. If we're up 100%, we're up 100%. We doubled our money, right? Imagine you go to the casino and you play blackjack. You bet a $2,000 hand. You double it. Now you're at $4,000, right? You should probably walk away from the table. But like I was saying, we come in and then we start filling more orders and we start moving up and over here. Now, within this, we didn't have a 1 hour candle closure to the upside. In fact, we didn't have a 1 hour candle closure to inverse the fair value gap. Instead, what we did have was we swept the liquidity off 1 hour highs. This 1 hour high right here, we swept the liquidity off of it. So that's what I want to say. What is our 1 hour time frames? Our 1 hour time frames is used for draws on liquidity, take profits. It's used for 1 hour draws on liquidity and our take profits. What did we hit? We hit TP. We hit our take profit. What else happened? We had a draw on liquidity, right? So now we got to look, all right, is this going to be a move up since we're having a lot of 1 minute closures out of it? Or is this going to be a move down? I mean, let's hop over to the 30-minute time frame and I'll kind of break you guys through what happened, right? 30-minute time frame, we have the 30-minute, and then even right here, 30-minute fair value gap, we don't even inverse a 30-minute fair value gap. I'll mark that out for you guys right here, right? Make it pretty short so you guys can see it nice and clearly. 30-minute fair value gap right there. What do we have? We don't inverse a 30-minute fair value gap. What do we have? We have 30-minute sweep of liquidity, okay? So over to 15-minute time frame. What do we have? We don't have any. Well, we have this small 15-minute fair value gap that got inversed, but what do we know? We know 30 minutes more powerful, and we didn't inverse for 30 minutes. Right, so now we got to look for, alright, is this going to be moves out of it? What do we have? We have break of structure. Alright, after break of structure to the downside, this low, we have to look for a reversal position. So price came crashing down to the downside, and now what a bunch of y'all might be thinking, alright, price came all the way down here, so what's to say price goes lower? I mean, we don't have an equal. We probably do have an equilibrium grab. By the way, I'm just marking this out in real time. I did not pre-mark all this out. Instead, this is just clearly what I see off my thought process. This is how I trade. So I'll run you guys through what I would have done to look for legs out of it. Because obviously we can't make a move this fast. If we're break structure, break structure, break structure, break structure, right, and then boom, we're all the way down here. We can't make a move that fast, and we don't want to be FOMO traders, and we don't want to be, all right, sell, 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 sell. Oh no, we're getting stopped out. We're losing. All that stuff, right? After that big candle spread, we gotta have a form of retracement, and that's what I loved, guys. That's what I love, retracements. Freaking love retracements, right? Open up our Fibonacci retracement tool. You're gonna start seeing me using this a lot, and genuinely love this tool so much, right? Because there's no fair value gaps in here that we could look to target except for these fair value gaps, right? So we come in, equilibrium, grabbed it right at the 50% line. And then what do? We tap into our golden zone, and we hit the 75% extension, and we close below it. This right here is where I would have been like, all right, we came down, we filled orders, we came up, we retraced, we're moving in the opposite direction. After that candle closure, that would have been my position. Stops set to 1 minute high, and I know what you guys are already thinking. Do I want to target all the way down there? Honestly, I really don't. What I'd want to target, the opposite of my position. I'd want to target there. I would want to target down to my stop loss. Now let me show you guys what's awesome about these two trades. Look at the RR right here. 1.32, 1.03, positive RR. 0.8, almost 2.0. Amazing RR. And even in here, we have nice, great price action. And we honestly could have even, targeted all the way down here. We could have came down and we could have targeted the negative 90% extension. Right? If we looked and this take profit got hit and we didn't close it and we're looking to go a lot further, what we look for? We look to target 90 percentile. Alright? I wouldn't want to come down and target all the way at the 190 percentile because this is where price action starts slowing down. But honestly, that would have been a good trade too for anybody who's willing to take that. Overall, this was my trade today. This was a trade that I missed out on, but all in all, we're profitable traders. What are we not going to do? We're not going to FOMO trade. And every opportunity missed is just an opportunity to learn for the next trade going into tomorrow, next week, next month, etc., etc. All in all, this was an amazing start to the week. We had a green day to the week. We had a green day to the month. We're up on the month so far. I'm hoping to get good payouts this month. Stay tuned for summer, guys. Major banger videos coming summer. You best believe I'm marketing the hell out of that. Major banger views coming this summer. And if all goes well, prop firm in June, hopefully, and we'll even come out with strategy videos later on. All in all, thank you for watching today, guys. I hope you guys learned something. I will go deeper into this Fibonacci retracement tool. I want to learn more about it so I can upload a video to you guys about it. And let's upload a full strategy breakdown video that I plan to do at the end of quarter 2 to show you how I was overall successful. And who knows, maybe we'll end this whole quarter 2 amazingly and all beautiful. But that's speaking into the future. For now, this is the trade that we took. It was awesome. It was amazing. I hope you guys enjoyed. Thank you for watching. Peace and love always. I'll catch you in the next one.